should you own your car personally or inside a corporation? There are many different answers to that question. There's one rule of thumb that I like to use. If the car has a low cost and you're going to use it a lot for business, that's a good car to put in a corporation. If the car has a high cost and low business use, then that's one to keep personally. You may get into the crazy situation where you have an expensive car that you use a lot for business purposes, and that one can flip either side. That one can be in the corporation or outside the corporation. There isn't a big difference there, but that's the general rule of thumb. So when we're talking about usage, business usage, a very important percentage to keep in mind is 50%. So if you have under 50% business use, so if you're using it more for personal use than you are for business use, you're going to be hit with a bigger taxable benefit on your T4. So what does that mean? So if you purchase a car inside your corporation and you're using it for personal reasons, so you're using it to drive the kids to hockey and to drive to the grocery store and to do all of that kind of stuff, if you're using it for personal reasons, then you're using a corporate asset, not for business purposes. So that requires a taxable benefit. You have to report a taxable benefit on your personal tax return because you're using that corporate asset for yourself. So there's a long, convoluted calculation to figure out what that taxable benefit is. That calculation takes into consideration a lot of things, like the usage for business versus personal and the cost of the vehicle. And the business usage, if it's under 50%, has an extra bump up to that taxable benefit. So definitely if you're using it less than 50% for business purposes, then that's probably a good car to keep outside of the corporation. But it's always good to ask your accountant about this. There are some quick calculations that we can run to figure out how much it's going to cost you to take money out of the corporation to buy a vehicle versus how much you're going to have to pay annually on the taxable benefit if you buy it in the corporation. So there isn't a clear-cut definition, but those are the rules of thumb that I like to use. So if you have bought the vehicle personally and now you need to claim expenses for it in the business, because even though it's a personal asset, you're still driving it for business purposes. So it's kind of the opposite situation. So it's a personal asset that's being used for business purposes. It's actually easier than you think. There's one very, very important piece that you need to keep a vehicle log. You don't need to track your expenses, you don't need to track your gas and your maintenance, any of that stuff. You don't need to keep track of any of it. You don't need to keep receipts, nothing. You need to just keep a log book. They have apps for it, anything. You just have to keep a log of how many kilometers you're driving in total and what trips are for business purposes. So the business purpose trips, you need to know the total number of kilometers for each business trip and what the purpose of the trip was for. So what that log does is at the end of the year, it tells your accountant the total number of business kilometers that you drove, and there's a simple calculation that we'll do an adjustment when we're preparing your year end to give you credit for those business kilometers. So the calculation is a prescribed calculation from the CRA. So for the first 5,000 business kilometers that you drive, you get 54 cents per kilometer. And for anything above 5,000 kilometers of business driving, you get 48 cents per kilometer. So it's an easy calculation and a year-end adjustment. Alternatively, you can submit expense reports to your corporation monthly. So if you're driving a lot and you don't want to wait until the end of the year to take that money out, you want to use that money, you want to actually have it supplement your vehicle expenses, you can do up vehicle reports that track the amount of, or just report the amount of mileage and do that calculation to figure out how much you get back. Based on the 54 cents for the first 5,000 and the 48 for everything after that. And you can just submit that. So you're doing it up and just handing it to yourself because you're the person who's running your corporation. And then you can just pay it out that way. And that will give your accountants a really nice tracking mechanism so that they can refer that back when they're doing your year end. And that's all you need to do. Vehicle logs are very, very important, and the reason being that if you're ever audited by the CRA is going to ask for those vehicle logs. So as you're reimbursing yourself for those business kilometers that you've driven, if you don't have a log for those business kilometers and you're audited, the CRA will disallow those expenses. So it's very important to keep those logs. A lot of people don't, and it can be a pretty big mistake when they get audited, because usually it's not 1 year that you're getting audited for, it's usually 2 or 3 or 4 or 5, and they'll want to see the vehicle logs for every single one of those years, and if you can't produce them, then they'll just disallow all of those expenses, which can cost some tax.